see it here in just a moment. Okay. Henry, did that come through for you?
Looks like we're going. Yeah.
Okay, perfect. Once again, welcome to everyone. My name is Brian Wilson, market strategist here for Market Structure Edge. I'm joined today by Henry Howard, who is our Director of Client Services. Henry and I will often work together on client or system related issues, so we often work kind of hand in hand. And Henry is a well-versed trader, so we're going to kick off today's discussion with some of his items that he normally looks at, and then I have 5 or 6 items to kind of unpack, and then we'll kind of take a look at the path forward together. So, Henry, it's all yours.
Awesome. Great. Thanks, Brian. And thanks again, everybody, for being here. Again, my name is Henry Howard. I'm the Director of Client Services with Edge. So I write the Wednesday desk note. Also, if you write into our live chat or send an email message to our support, you'll hear my voice along with Brian's voice talking back at you. So I wanted to get started. I'm going to go ahead and share my screen here. And what I mostly want to look at is just walk everyone through a daily process. So if you're like me, I tend to be a discretionary trader, but I have a very solid process for what I'm looking for on a daily basis. And so I'm going to start by giving you just a little bit of an overview for those of you who are new with Market Structure Edge. So this is our dashboard. This is broad market sentiment. And so broad market sentiment is based on the State Street S&P 500, and it's a measurement of sentiment. It's a measurement of the trading volume. I shouldn't say trading volume. It's a measurement of the activity within the S&P 500. So if you look here, this is sentiment. We have our green line on the bottom, which we tend to think of, when we cross over this green line of 4, that's an entry point. When we get to this red line up here of 6, that becomes diminishing gains for us over this red line. And so that's the first look that we're going to look at is broad market sentiment. This is short volume. So we've talked about this at length, nearly record high short volumes that are remaining really high at 52%. We'll talk more about that. But the first thing I'm doing is I'm getting a really good grasp on, is sentiment declining? Is sentiment rising, and is short volume rising or falling? I'll wait. Sometimes we get the question, will you weight sentiment or will you weight short volume higher? I tend to weight sentiment, the movement in sentiment, higher. So that's the first thing I look at. Let's jump over and talk about the second thing I look at. The second thing is the number of components in our momentum portfolio. So these are and our low volatility portfolio. So these are default portfolios. These have been created by Edge, by Tim, to optimize both our momentum portfolio, that is just a measure of volatility, those names that we expect to move more on a daily basis. And then we have low volatility. So really what we're doing is we're balancing these two things, momentum, having more of a risk appetite that tends to be looking for growth, and low volatility tends to be a little bit more defensive for traders. So we can look at actually where it says here companies 21 and companies 23. We can look at the number of companies in momentum and low volatility to get an understanding of where the market's shifting. So I'll go back a week ago. If you were to look at low volatility, there were barely any components in low volatility, or I should say, a lot of components in low volatility, barely any in momentum. And so we had seen that shift into, I think it was healthcare and utilities. So these names that aren't moving a lot. And so that signals it's time to move into low volatility. Over the last week, the market sort of had a little bit of a sell-off, and now we're seeing this flattening. Momentum, we've seen this shift back into momentum. And so what we expect with momentum, with rising broad market sentiment, is a market that rises. It's not doing that right now, but we have some understanding behind that within context that we're going to get to. But my expectation continues after looking at broad market sentiment and then looking at the number of components in momentum, is that we should have some upside. So those are the first two things that I'm looking at. The third thing I'm looking at, and is maybe a reason to be hesitant, and I mentioned this as sort of a caveat in my desk note yesterday on Wednesday, is the components of big tech and how those are moving
and they're about
together.
50x or more
So,
efficient than trucks.
hold on, I'm going to mute a participant here. There we go. And so, okay, so this is again big tech. The top 8 components of the QQQ. Market cap. I'm going to go in here and I'm going to sort by market cap, because what I want to see is out of these biggest, out of the the 8 of the biggest names, I want to see, are those moving together? Are they moving sort of contradictory to each other? Are they moving upward together? Are they moving downward? And the other thing I'm going to mention is overall, where are they in relation to our sort of central metric of 5? So we think of 5 as the nexus of supply and demand balance. So under 5, we expect that there's not as much buying pressure, upward pressure on the market, or I should say over 5, we expect that there's more buying pressure, and so we expect prices to rise. Below 5, we expect prices to fall. That's sort of the general rule in the nexus of 5. So getting back to these larger components, what I want to see, what I love to see on a really strong market is what we would see is Apple, Microsoft, NVIDIA, Amazon, Google, all moving 6, 7, 8, 9, even if they're hitting the roof. That's a momentum market. I'm jumping in, I'm leveraged long when I'm seeing those numbers. Even, we're starting to get there. We're at Google is at 5, Amazon's at 6. Like, these are looking to move up. We have not a terrible amount of supply and short volume. The issue right now is that these can be higher. That when we're moving, we talked about the nexus of 5 is that when we're at 4.4, 4.6, 4.7 and barely, getting over 7, when we see Microsoft that's topped at 5, that gives me a little bit of pause that the market may not, the market needs these really large components to keep rising. Most of the ETFs are based off the liquidity of these really big components, and so the market needs these names to be able to rise. So this gives me, despite the number of components, despite broad market sentiment, the fact that these names are at 5 and 6 and Microsoft's topping, Apple's still sort of struggling to get over 5, that gives me a little bit of pause. So, it doesn't mean can we trade these names? Absolutely. But on the whole, we know that the amount of strength in the market right now isn't as high as it is at certain points in certain momentum situations. So those are the 3, we broad market sentiment. We talked about the number of components and momentum, and then we looked at big tech. So those are the 3 things. Every day I wake up, I check the futures market, and then I check these 3 things. After I've checked these 3 things to understand what's undergirding a directional market. Is it a directional market? What's undergirding those from a supply and demand, from a sentiment and short volume perspective? After I've done those 3 things, then I'll shift over to our daily trading ideas. So I've like I've said, I still expect this market to have some upside to it. The issue is right now, big tech, it's going to be the only thing that takes us there. And there's not a ton of strength in big tech. So before we get to that, let's go and look at daily trading ideas. I had mentioned yesterday the top 2, these tech names, CLS and App. We had mentioned them in my desk notes. So this is the names that are statistically the most probable to deliver gains in the next 1 to 5 days. We've back tested. I mean, this is year 4 of Edge. We've back tested and tested a lot of different data, and we've ran a lot of different portfolios. I know a lot of people on the call, have your own dynamic portfolios. You can go in there and adjust the parameters, but these are the ones from a long only perspective that have given the highest probabilities of returns. So I tend to sort these by probability. It's only after I've looked at broad market sentiment, big tech, and the number of components and momentum that I'll shift over here. And then I'll sort by this, and I'll just pull these names up. VST, a utilities name, not a bad name if you're looking for something that's not in big tech. I just mentioned that big tech's not great, but you can sort by name, you can sort by market cap, and then you actually have these entries, entry high and entry low. It's really giving you a range using our volatility metric of where you can enter. So that's what I'll do. I'll reach in here and I'll find these names depending on the market. I may wait to find the lower range. So, for example, right now, if I'm looking at a market that doesn't have a lot of support in broad market sentiment, and broad market sentiment's just sort of rising, I'm going to want to find one of these names that's that's closer to its lower entry. And then I'll be able to confidently enter that position, knowing that over the last 90 days, under these conditions, there's a high probability that the price rises from that point. So, one last recap: broad market sentiment, momentum, big tech. That's what I'm looking at. And then I'm making a decision within these daily trading ideas. We'll get to context. So I won't keep going. I'm going to toss the baton back to Brian right now. I'm assuming we'll get into context. We're going to talk a little bit more about the impact of bank inventories on the market yesterday, and what we should expect going forward with some of this divergence. So that's all I have right now. I'm going to stop sharing. I'm going to lob it back to Brian, and he's gonna keep us going. Any questions before we go? Feel free to drop questions in the chat too.
Thanks for that reminder, Henry. A couple questions for you. It looks like we have a question coming in from Max as well. We'll get to that here in just 1 second. Henry, from your experience, if tech is not doing well, what happens to the broad market?
I look at them separately. I look that they're both moving upward right now. Broad market's just now rising over 5, but I tend to put more weight, at least if you're trading futures, and I think Tim's talked about this before also. If you're trading futures, that I would put a higher weight on that big tech, sort of some of those big tech core understandings that we went through. But broad market sentiment is still, it's the first thing I look at when I'm sort of doing my daily overview. But I do love where those really big components are lining up together. If they're all, if you got all those components and they've bottomed at 5 and they're starting to go to 6 and 7, that's a really good condition. What we've seen right now is like Apple was at 1 for a long time. It's barely going. It's barely creeping up. So, that's a place to be hesitant. And then I'm looking. Max, absolutely. Taking profit on volatility. I will base profit taking off volatility. I'll know where that. But market makers are looking for a middle ground. Even right now, I told Brian this yesterday, is that we're kind of, where SPY is, we're kind of at a midpoint from where we were a week and a half ago to where we were a month and a half ago. We're kind of at a midpoint right now. So just understanding that there is a midpoint for not just the broad market or SPY, but there's a midpoint for every one of these names. And by using that volatility metric, yes, I'll absolutely use it as an exit. Depending on how confident I am in broad market, I will push that volatility metric a little further. But a day like today, if you've got that, if you could pull 5% out of one of those momentum names, absolutely take it. Because the likelihood is it's going to go back down looking for liquidity. That's it's not so much people, we talk about this a lot, is there's not stock pickers anymore. I think it's 10% of volume is based on stock pickers. Really what it's about is maintaining liquidity. So that's all I'm going to say. Can we take a look at app today? Yeah, we can, Candace. Good question. I'm going to float it back to Brian, and then maybe we save app, a little overview of app. I'll pull it up here and take a look after Brian does his portion.
Thank you. I appreciate it, Henry. I'll
Yeah.
go ahead and share my screen. I just pulled up app, so we can go ahead and take a look at that here at the beginning. Obviously, one of our, well, let's go back to the dashboard for a second so we can show everyone. So it's in the daily trading ideas. And I usually will just, sort that so I get my top names. And you can see that's 100% probability right now. The low end of your range, 317 going up to about 334. If we look at pricing for it today, coming under some pressure, right? All the way down to 290, 11% declines. The question, I'm assuming, Candace, is this a good entry point, assuming that it's in our momentum portfolio, it's below the daily pricing? It's a good question. Before I enter a name, I'll go and I'll look for news. Is there any reason, especially here, that it took a sudden downturn? And I'll check a couple of sources. Google Finance. I'm not seeing anything. I went and I checked another source that I have. It's just a Fidelity account. But there's a short piece out there that just hit 16 minutes ago. So Muddy Waters issued a short report. Personally, I think I'm going to leave that one alone today. I don't know how that short report is going to impact trading. Obviously it's below its normal intraday volatility. And by the way, here's what I'm talking about for volatility. So normally volatility is 6%, and it's almost twice its normal volatility already. So immediately, it's like, okay, something is amiss here. There's a news item out there. I don't know how much fast traders will take this name lower today. Maybe I look at it at the end of the day. And if I do take a position, it's probably going to be rather small. Hopefully that answers your question. I'm going to leave it alone for now, just because of that news item that is out there. Henry did a great job of unpacking where we're at right now. And as I'm thinking about it, I'm going to label it a battle. We're in a battle between rising sentiment, but also rising short volume. And these short volume levels, you actually have to go all the way back to 2022 to see short volumes at these levels. And I'll kind of unpack a little bit. I'll try not to go into the weeds too much, but I just want to share with you where we're actually at. So this is where we're at right now, 52%. You have to go all the way back to this spike here, which was back in September of 22, to have anything from a comparative standpoint. So right away, that's telling to me. Market participants are very short. Henry did a great job of unpacking the short volume concept in yesterday's note, but there's just there's not that aspect of being long that you see in a bull market, at least for right now, right? These shorts could get covered. I personally, I thought that they might have gotten covered this morning. We'll go back to a shorter term view so you can see it a little bit better. But if you look back, you're like, okay, well, short volumes the last 6 months have not been at these levels. We're pretty much near as high as we normally get. What happens to the market this week if we get short covering? And I thought we could potentially get a rally, and we did get a little bit of a boost here at the beginning of the week. But it's obvious right now, at least right now, these shorts are not getting covered. And once again, you have to go all the way back to 2022 for a comparative. So they're an issue right now. What ends up happening is you get a little bit of a rally with sentiment moving higher, but when short volumes are high at the same time, it tends to introduce a very choppy market. And it's very similar to this, right? And let me move this down to 3-month view so you can see it a little bit better. So you just get this choppiness. You move higher, you move lower, you move higher, you move lower. Just that very definition of a battle that's out there. And that's part of what I wrote about this morning with this morning's market desk note. What do you do in a market like this? Well, one of the things that we have to do is we have to take our gains. And they might not be exactly what you were hoping for. I had a couple of energy names as an example. They were value plays for me, and I had made 10 to 12% in both of those names. I was hoping to keep them for another week and a half. I'm like, you know what? I'm just going to take my gains. I took my gains, let it be. I was in a momentum name yesterday. It was, in fact, I'll show you what it was. Move out of this for a second. So it was from our daily trading ideas, and VST was down when I bought it 6.5% or so. I didn't see any news in the name for that particular day, so I bought a position, and at the end of the day, I was up 80 basis points. Not a huge gain, but I'm like, you know what? In this market, it's so just squirrely right now. I'm going to take those gains. So you just have to be very selective. You have to be willing to take the gains and not take chances. And it's just a difficult market right now. It really is. Henry was mentioning that in some markets you get a good predictive quality to the market. All of the large cap names are moving in unison at one time. It's like, okay, well, we got a pretty good feel for what's happening right now. That's not one of these markets. We're getting momentum and low volatility names that are increasing. That's good news. I just showed you short volume is increasing at the same time. You asked the question, well, is it a market that we can short? That's also difficult. Look at my 2 short portfolios. My friend Barry, I only have 7 names in that one. I only have 3 in my short portfolio. This short portfolio a week and a half ago had 60 names in it for perspective. So it's a hard market to go long in. It's a hard market to short right now. It's just a difficult market.
But isn't that, sorry, Brian,
go ahead, please.
I just want to emphasize what you just said.
Yep.
Isn't that the answer that we need? It's a hard market to go long. It's a hard market to go short. And so we can trade a range. I mean, that's why
Yes.
we say those volatility metrics. It's like, you don't have to get the long only move. You don't have to get the short only move. We recognize that there's a 1.5% that the market's going to move around yesterday's range. And so you don't, those bigger names that we tend to be runners that we're trying to hit home runs on, like app, like that tends to be like one of those things. It's like, let's load up and get long on this thing. But if we're not in a momentum market, just trade the range, stay alive. That's kind of my theory in these situations, is like, just peel off 1.5% every day and you're doing great. But we're not going to get the runs that we've been expecting. So sorry to interrupt you, but it was just such a great point. Is it like, it's mixed? Yeah. So trade the range, adjust your strategy in situations like this. It doesn't have to be long only or short only. You just grab that range, wash, rinse, repeat. So, okay, I'm gonna stop rambling, but it's just like so poignant.
No, you're good. I'm gonna stop sharing for a second. So talk to us a little bit more about trading that range. Can you give us an example of what that might look like?
Yeah, I mean, I think this morning's a great example. Is so if we were to look at SPY stock, like, I'm not going to go when we're at this morning, when we're at right at 56, 5690. Let me share this so I'm not talking out of my head without you guys seeing what I'm looking at. I just pulled up SPY here. So I'll give you 2 things. Just the forward-most future contract. When I see this cliff pre-market, but I know that we do have rising sentiment. And even though short volumes are really high, like sometimes those short volumes can kind of uphold a market. So when we get down into what I know is like a pretty significant move for, starting at 8 o'clock to, 8:45 is a significant move. Well, that becomes an entry point, but I'm not trying to hold this thing, after it's ran, it's sort of 1% range or less. I'm not trying to look for that thing to run. So, again, here we are at the open this morning is, we're close to that bottom range. Well, we're not really going anywhere. We're just sweeping, looking for the liquidity today. I still kind of think we're going to go up at the end of the day, but to our point, it's like it's very mixed. So to take an entry point, right at this midpoint, there's no advantage to that. If we get 50, 574, well, then I might consider, and we still have this really high short volume that hasn't unraveled. Then I might look for a day trade sort of short. But this is the range. I mean, you can just see the market, like it's just snorting out sniffing out the midpoint here, and finding liquidity wherever it exists. And that just I mean, this is a great graph because it speaks just to what the market makers are doing. They're like, is there anybody down here? Is there anybody up here? Is there anybody down here? And then finally we're gonna land right back to where we were yesterday. So so that's what I'm looking at. And I'm not trying to jump in or chase at that midpoint even. Like, I got to see something that I think is too far up or too far down for the day. So that's that midpoint that I'm talking about.
No, thank you. Quick question from Candace to that point. Would you set limit orders before the market opens to buy in that bottom portion of the volatility during the day?
I'd watch it. I'd be watching it. Just because on a down, jumping in and on a down market, I want to see, I want to see a green bar first on 15. I want to see 15 minutes worth of green before I get too far into it. But, I'm not trying to catch a falling knife, but I do get confident when it's down that range that this is going to, if it doesn't at least start running in the next hour and a half, then I'm not going to stick around and lose money. But
So
yeah,
you're
I mean, I'm going to
for-
watch it. I'm going to set an alert. I'm either watching it or I'm setting an alert, but I'm not setting an entry. I'm not buying anything without looking at it personally.
Sure. So you're looking for a little bit of confirmation then.
Yeah. If it keeps doing this thing for another 30 minutes, forget it. I got better things to do. Yeah, I mean,
kind of like yesterday, right? You just get that movement.
If it doesn't go green, it might, if it doesn't start green in 30 minutes, and that's not a set rule, but on a day like today where I know it's going to be mixed and we have really high short volume, then I'm going to be a little more trepid. But if big tech's through the roof, then I'm not worried as much.
Sure. No, thank you. That's good discussion. Thank you very much. I wanted to actually circle back to what Henry was discussing earlier, because I think it's a good exercise and it doesn't take very long to do. And what I want to do is just go through big tech just briefly here and just kind of walk you through, what a morning, might look like in just a couple of minutes. I did this before the call in just a couple of minutes. So I'm going to just sort it by market cap. So just looking at the big ones here and just quickly walk through how are we set up right now? If you look at Apple, well, we're rising from one. We're basically right there at neutral. Short volumes are low. It's a decent setup, right? We're right around neutral. We don't have that strong demand above neutral though. And if we look at the impact from rising off of one, what has it done to share price? It's moved from a 214 to 221. So it hasn't done very much with that move, from one all the way up to five. So, rising demand is not really impacting share price very much. What about Microsoft? it's stuck, right? Look at the price moving lower, but of course, we're not so centered on price. What's happening to sentiment? Sentiment can't get above neutral. It's just stuck below neutral. There's no good demand in Microsoft right now. Let's look at what's happening with Nvidia. Look at the setup for Nvidia. We got to 10. We got a brief lift in share price, and we stayed at 10 for what, 2 days, and it's already falling. And you can see share price is already falling. So we're falling sentiment, right? We're not seeing anything that gives you the warm fuzzies. We look at what's happening with Amazon. Well, we're getting increasing short volume. Short volumes are increasing quite a lot, roughly at neutral with high short volumes. Don't love Amazon either. We look at what's happening with, I always want to call it Google. Look at what's happening with Alphabet. Uh, Similar, can't get above neutral. It hasn't been above neutral for, a month and a half. So, once again, not great demand there either. We look at, what's happening with Meta. Very similar. It's been washed out, roughly right at neutral. Short volumes are fine, but we're neutral demand. And we'll do one more. We'll look at everyone's darling that's been in the news here recently. What's happening with Tesla. Probably the best of the lot in terms of sentiment is actually increasing. And we're seeing the effect in terms of, sorry, we're seeing the effect in terms of higher prices moving from 225 all the way up to 288. So that one is, responding to higher sentiment. But if you were to look at all of those together, you would probably say the only one that's kind of good right now would be Tesla. It's just a poor setup. Now, a couple things to consider. Henry had talked about context. As we're thinking about context, note when the market actually turned again. It turned right after options expirations concluded. You hear us talking about context all the time. And what I mean about expirations concluding is the fact that we got past the green dots. That's expirations activity. As we move past expirations, the next day is when the focus will then shift to the next series. So in this case, we shift to the April series. The next day, the counterparties are going to, balance their books. And then after, and we call that Counterparty Tuesday, after everyone balances their books, then we get a clean look at the market. What did the market do yesterday? It immediately fell. Not the best signal coming out of expirations, with short volumes staying high. Now we are coming up to another event on the calendar, that being quarter end activity. And if we look at what tech has been doing, so far, I got to move my screen here for a second. Apologies. If we look at what's been happening year to date, there's been only two sectors that have been lower. So down about 3% on the S&P 500 year to date. Consumer discretionary, a lot of our big tech components are in there, and technology, obviously a lot of big tech components in there. Everything else is green. So we're coming into quarter end with, let's call it extreme weakness. That really is. If that were to continue that trend, you're down 36 to 40%, by the end of the year with consumer discretionary, and tech is down 32%. Obviously, terrible performance. What does it mean that these have done so poorly going into quarter end? Even though the setup is rather poor right now, could we get some money coming into, let's call it potentially underweight sectors? Sure. I don't know if that will happen or not. As I showed you, the setup really is poor right now. And if we look at what's been happening over time, and this is an exercise I do. I don't know if it has any predictive quality, but it just helps me to keep track of what's happening with the different sectors over time. And I try to do it every 2 or 3 weeks. So for instance, with tech, you can see going back to last August, it was a 32% weighting in the SPY. You can look here in December, January, it was 32%. We've had obviously terrible performance year to date. Look at where it was yesterday, all the way down to 30%. So we're getting money that's coming out of that sector. Tech tends to drive the S&P 500. Well, the S&P 500 has struggled. So we're waiting for that to change a little bit. And I think for this number to start increasing over time, obviously right now that's going the wrong direction. I don't know if that changes at quarter end. It could be just a continuation of this same trend, that we've been seeing. It did not change at month end. In February, we had been moving lower in January. It did not change. I don't know what happens at quarter end, but it's just something to think about. I mentioned the fact that there's just nothing to short right now. It's difficult going long. It's just a challenging market. One thing to think about as we move into the new month is we have something called new month, new money. And let me back this look up about 6 months to give you an idea of what will sometimes happen. So, I mean, here's an example going back to November. This was month end in November. We come into a new month. Think about 401k allocations, that type of activity. And sometimes, a lot of times in the past, it's been good for market performance. Recently, not so much. In fact, let me back this up just a little bit more, show you what started to happen the latter part of last year. This was August of last year. So month end in August, market was terrible afterwards. There was no new month, new money. Look at, that was July, sorry. August, same thing. Market was terrible afterwards. We look at September, not quite so bad, but there wasn't much there. You get the idea that we've had this string where money is just not having the same effect at the beginning of a new month. How have we started off so far this year? We get to the end of January, kind of so-so, not much really. We get to the end of February, terrible. The market collapsed afterwards. What happens right now? Don't know. We're certainly watching, but you can see the trend in short volume. And once again, that trend in short volume, when you back it up, you have to go back to a bear market to see these levels. So it can certainly change. I'm not saying that it won't, but it's not a great setup right now.
Thanks. So Brian, there's a couple things that I'll share real quick. We have,
Yep, absolutely.
as we're looking forward, I get a couple questions on AVGO and VST. So an energy and a semi name. So let's go ahead and look at the semis. I just in about 2 shakes, I put together a little semis portfolio. So if you want to get into semis, here's your, if you look, I have like a little heat map that I run over here, and I just pulled it up for once. Here's my semis. Obviously a terrible month. But if you wanted to get into semis, when it's down here, that's just not the time to be in semis. So again, because they're down, it's probably not the best thing. That I don't have a whole lot of confidence in any of these semis right now. I feel like riding the semi train was last year. But then the other one that I wanted to look at, and probably what's a better point, is VST, which is an energy play. So, what you'll find a lot of the time is an excellent entry on energy. here's the entry on energy is at the beginning of the month. Well, let's go look at the heat map and we can pull over here to energy. Well, yeah, it's had a great 3 weeks. Energy's had a great 3 weeks and a great month. Well, look at the sector as a whole. There's your entry is when it's down here and then when it's rising. But as we get up here and it's higher, this tends to be the opportunity to take profit. So here's VST again. Not that it's not, it's right at this 120 name, but the play is to ride it upwards, not to buy it when it's at its peak. So I hope that helps a little bit on VST and then also on NVIDIA on the semi names. And goes sort of towards what we're saying next is like, do you want to buy stuff? We do want to buy stuff as it's rising. And those semis are sort of attractive. I have a thesis on semis that is based on the price of NVIDIA that I've shared with Brian, but I won't. It's more of a personal preference than anything.
A question. I'll toss you a question, Henry, and then I'll try to answer it as well. What are some of the best ways that you try to trade a choppy market?
Just not volatility, excuse me. I think the volatility thing is great for a VIX short once it's after it's spiked, or I think in a situation like this where we don't have a strong directional trade is just to find the volatility, is to find when something's down, buy it and ride it up until it's up and then bail on it. But I'm not trying to hold stuff for multiple days. The like grinded out momentum markets that we've seen the last, at certain times the last few years. I'm not trying to take long. I'm sort of shortening my time horizon. If I'm, if I'm a little more confident that it's oversold, I'll position a little higher, because I'm really confident that even though it's not a really directional market, that it's going to bounce. And we're not in a context where we're through the context, especially right now. If there's nothing that's gonna push us 1.5% lower, there's no reason for it unless there's like some, unforeseen event. There's no reason for us to push lower while there's nothing going on. Come Tuesday, like Monday, Tuesday, when monthlies renew and they don't get bought at the beginning, I'm gonna I might let that thing fall lower before I jump in if it does. But there's not a lot of context between, now and tomorrow, outside of the pre-market stuff. That so back to the question. Just trade them, trade the chop, depending on how choppy it is. Buy it when it's absurd, when it's abnormally low, and we know the range and we know the volatility, and then don't try to ride it out for 3 or 4 days, because you'll probably just be frustrated that you sat on it too long. You'll find yourself in the same position you were when you picked up the position. But
Candace, to add to that, it's kind of like what you were looking at earlier with APP, right? You're looking for some of those outliers, but of course, I'm looking for outliers that don't have news attached to them. I traded a name a couple of weeks ago. I actually did it like 2 different times just because I knew the name pretty well, and it was one of those where it was below its intraday volatility. I didn't see any news. I bought it and sold it the same day for like 8 or 9% gain. It doesn't, you love to repeat that every day, right? It obviously is difficult to repeat those trades all the time. But to Henry's point, look for some of those outliers. Let me share my screen one last time, and then I think we're kind of running out. It's a challenging market. You've heard me say that like 4 times already. But in this market, you look at the battle that's occurring right now, just from a VIX perspective. And these are the 2 that I track. So are you either buying volatility or are you selling it? So if you're selling it, nothing's going on. If you're buying it, nothing's going on. It's just kind of a weird market right now. These are some of our top names with momentum today. Tough day for momentum names, right? They've been a little difficult the last couple of days. Even though I prefer to trade momentum, For me personally, I think I'm going to shift to low volatility for a couple of days until we get a little bit better clarity in the market. I don't know if anything's happening in PPG today. I'll take a look at that after the call. You can see, generally speaking, low volatility is being a little bit better. So I think personally, I'll shift my attention for a couple of days to low volatility and maybe try to take out some of this potential for downside if I don't have my stop limits set in play. Well, with that, guys, Barry, Candace, Dan, any closing comments from anyone?
No, I think you hit it spot on. I think with the just balancing the momentum and the negative momentum portfolio is a clear indication that we're in a market that you really can't go in either direction. You got to just play the sideways market and sell premium. I mean, that's really all you can do.
Mm-hmm. Mm-hmm. No, it's
Yeah,
it's good.
I'm still having the same problem with the all stock portfolio. I didn't put in SPY, but it's still not working for me.
Okay. Let me take a look at that afterwards and see if I can
Cool.
figure out what's going on there. Thank you
Cool.
for letting me know. Guys, we appreciate you jumping on the call today. As always, we appreciate the interaction. And Henry and I are always available via email. If you have any questions, we'll be here again next week. Tim is on a boat enjoying a little R&R. So we wish him and his wife Karen the best, and we'll catch up with them in a week and a half. But have a great rest of the day. Thank you for joining the call today. We appreciate it.
Thanks, Barry. Thanks, Candace. All right, Brian. We'll see ya.